On this episode of the Stock Market Playbook, we've got George Coyle, who co-authored a Market Wizards book, which comes out in just less than 2 weeks. It's a great story. He's got some great takes and some great points. If you haven't read the Market Wizards books, they're kind of the Bible for most traders. So we have a co-author of one of these books. It's a super great episode. I think you're going to love it. Enjoy my chat with George. Okay, George, thanks again for joining us on the podcast. We are happy to have you joining us from the Midwest. Is Ohio considered the Midwest?
It is. Yeah, I think so. Midwest, Mid-Atlantic, depends who you ask, I guess. But
it's on the line.
It is the Midwest. There's a lot of cornfields out here and wheat fields, so soybeans too. But yeah,
man, I think it is worth reminding everybody how many. I mean, obviously, you may not have the list off the top of your head, but major companies have come out of Ohio. Like that has been like a breeding ground for a lot of big companies. A lot of, a lot of insurance companies have come out of Ohio. Is like American Eagle one of the big retail companies?
Les Wexner, he's been getting some attention because of Epstein, but he's out of Columbus. He started, I guess, the Limited, Victoria's Secret. There are a lot of different, I guess, sub brands. But yeah, so that's. I'm outside of Cleveland, essentially. That's about 2 hours south here. But yeah, there are a handful of big companies. It used to be a steel town. It's not quite what it was, I think. It's funny. I listened to Rockefeller's biography, Titan, by Ron Chernow, if you're familiar. It's crazy, 800-page biography that just tells you everything you ever wanted to know. But apparently, like 100 years ago, a lot of the richest people in the world lived outside of Cleveland, and they had Millionaires Row, and it was like New York and Cleveland, and that's obviously changed a lot in the last 100 years. But yes, it was a big deal. I guess I don't want to poke it in the eye necessarily, but it was a much bigger deal 100 years ago than it is now. So.
Than it is now. Oh, that's awesome, man. It's for those of us, I've spent most of my life, in the Western US, Utah, California, kind of those spots. And so, kind of like yourself, like you don't make it this way as often. I don't make it that way as often. And Ohio's a little bit of a hidden gem. And speaking of Cleveland, I won't give away my positions too much in my hedge fund, but I don't currently own any Cleveland Cliffs stock, but I have been in and out of that company many times, and I have hope. I have hope that our CLF is going to make a run. So if you could send a little bit of a little bit of love from Cleveland over to Cleveland Cliffs steel company, that would be helpful. But
yes, I will do my best. There's Eaton is here too. They're a big electrification company. There seems to be more thematic stuff going at that than steel these days. But
I know.
Yeah.
Man.
Anyway,
steel is a tough sell these days, but that's super cool. Okay, so for my guests and listeners that are seeing you and hearing your name for the first time, tell us a little bit about yourself and your background and how you kind of got to where you are.
Sure. The backstory is I'm originally an Ohio guy, moved up to New York City after undergrad, wound up working for long short equity hedge funds for about 10 years, wanted to get into macro. The crisis happened, financial crisis. So I went to grad school at Columbia University in New York, ended up getting an internship with Victor Niederhofer, a famous old trader. Did that for 6 months. It was great. Got out of school and wound up getting a job as a macro strategist with Carol Sokolov at 13D Research. They write What I Learned This Week. And did that for a handful of years. Living in the islands was a little tough. I got dengue fever a few times. It wasn't my thing. But moved back, started a company, didn't quite work out, and ended up moving to Chicago, wound up working for a family office there as their CIO for about 8 years. And while I was there, I started writing various papers that led to co-authoring the Market Wizards book, but I won't go down that rabbit hole now. And then a few years ago, my wife and I moved back to Ohio, really to just be closer to my family, raising the kids. And I started an RIA and produced research. So that's the quick and dirty version.
That's great, man. That was kind of baptism by fire right there. You've got a lot of interesting points on your career path to this point. So the hedge fund world, family office world, a lot of great experience in finance, and now here you are. The research side of things is always so interesting. I think this is such a great opportunity. Obviously the big hedge fund and financial, research companies that have been around forever and ever. I was at Hedge Fund Week, in Miami, a couple months ago, I guess now, and I got approached by all the big research firms, and they want to sell me their research for a bunch of money and so on. And I thought I'm at the point now, like with my hedge fund, where I'm very suspicious of the big research firms. I much prefer the smaller groups, the individuals of a couple of people that I feel like have such a better feeling and finger on the pulse of the market, as opposed to a big 10,000 person company that's writing research in every different direction of everything. And so it's interesting. I think the smaller groups are so much more interesting. They produce some wild stuff. So good for you. That's super cool.
Yeah, I think that Substack and platforms like that have really kind of democratized the research business and made very low barriers to entry. So a lot, pretty much, I mean, I probably know more people writing a Substack newsletter than I don't at this point. But I think
Totally.
that, the big Wall Street firms still have access to management, things like that, that it's hard for independents to get. So there's pros and cons. I think so much of it comes down to really, what are you trying to do as an investor or researcher? How do you
Yeah.
differentiate? How do you peel the onion, right?
Yeah.
And then finding the right fit. But the other thing now is just there's so much of it out there that it's like, how do you sift through it? And unfortunately, what I do is sort of thematic secular trend stuff. I read essentially quotes from executives in corporate call transcripts, and I triangulate, hence the name of the company's trends, and I'll find out that 50 guys are saying there's AI or data centers in space or what have you. And I find that that's to me helpful for what I do because it's like there's going to be real money being spent there.
Yeah.
But I think in the world where there's just so many people, and maybe this is always true, but the guy who is going to shout the loudest and have the simplest message is going to get the most attention on the platforms. So if you say gold's going to 10,000 and somebody says, "Well, why?" and you say, "Never you mind why," that guy's probably going to be the most followed person. Whereas people that are doing I don't know, more objective maybe, or there's a guy named Philip Tetlock, and he had a guy named Dan Gardner, he's a reporter out of Canada, and he wrote a book called Future Babble and Why Expert Prediction Sucks and People Follow It Anyway. And he talked about this dichotomy between hedgehogs and foxes. And Janet Yellen's a fox, probably one of the only times you'll ever hear that. But you ask her a question, and she's got this long, multi-contingent answer of like if, come, and maybe. Whereas a hedgehog in his terminology would just be like, gold's going to 10,000, like because it's going. That's it. And so it's an interesting look to anybody
Yeah.
who likes research to read that book and kind of approach things with a different angle and say, oh, what am I really looking at here? So anyway.
That's interesting. That's interesting. And I think that's a super good point. I know a lot of my listeners and myself in my own hedge fund, I'm always, looking for good research, always looking to find people that I think have an interesting take on things and obviously a decent track record. And so that's an interesting like obvious point that probably nobody knows. Like, I mean, I hear that and I go, yeah. Like that's super cool. So now here's a question though. So in your research, let's say you listen to a bunch of or you skim through a bunch of earnings calls transcripts, right? And whatever filings may be involved in a publicly traded company, and you see AI mentioned everywhere, right? I've been in the stock market too long not to be a contrarian, right? And so it's I've tried not to. I wanted to just go with the flow and just do that kind of thing. And I mean, what when you hear like a lot of AI talk or a lot of whatever the key theme of the current moment is, I mean, have you looked back and seen, like, for example, I don't know, in 2007, how did earnings calls look? Were people like real estate's the best thing to buy? These CEOs. I mean, at what point do we get to kind of fever pitch of every company and every CEO and every transcript has, whatever the theme of the time is mentioned countless times, and do we see that as any kind of a contrarian signal?
Um, I think that as an investor, so much of it comes down to how you design your process, what you're trying to capture. As an investor, I think a lot about fish nets, right? Fishing nets, not stockings. But if you go to a pet store and you want to get a beta fish, a fighter fish, you use a little net. If you go fishing and you want to bring in a big fish, you need a big net. So, what are you trying to catch, and how do you use research to feed your process from the investment angle? As far as, the prevalence of commentary, that's really tough because for example, right now, a lot of guys on X and other places are saying like AI is way overblown, it's overdone, it's the ninth inning. When I go to transcripts, and AI really started to pick up in early 2023. We had Silicon Valley Bank going out of business. We had rising interest rates, inflation, lions, tigers, and bears. And then all of a sudden, like commentary on AI starts getting positive and the stocks start to go up. But for the last few years, people have been talking about it more and more. But what they haven't really done is quantify how they're going to use AI, how it's going to benefit them. And now we're getting into this era where you have a lot of people, sort of voices in like the popular media, let's call it, that are saying, "Oh, it's over." But then if you read what the executives are saying, they're like, "Hey, we just started using this." And they're talking more about agentic AI, which is more specific and using agents to automate things. And they're starting to actually quantify, where they are in terms of how it's benefiting their business, their margins, essentially. And they also are saying, I mean, nobody that I've found from the transcripts that I search is saying we're in the later innings. They're all like first inning, second inning. So who do you
Interesting.
believe? Do you believe the traders who've made a bunch of money on the stocks, or do you believe the executives who are saying we're implementing this and we haven't even started, essentially? So, and I guess I'm sure that stocks are going to move, and they're going to move up and down, and there's going to be winners and losses, as always, right? Winners and losers. But to me, what I try to do as part of my process is basically just align with where I think the money's going to be spent over the next several years, and then I use uh, predominantly systematic models in what I do that are predicated on trader principles to manage the risk that stocks go way down. Because usually by the time you find out that the trend was overblown, it's it's pretty late, right? The stocks are down a lot. So yeah, I know that's a fox answer, not a hedgehog answer, right? But that's kind of how I look at it. It's like I think it depends how you look at your process, what you're trying to align with, and then how you trade or implement that.
I think that's a great answer, and it is so interesting. When I look at, like, as a smaller fund like myself, we're certainly sub $50 billion. So, easy to implement new technologies. AI has been so helpful in so many things, in my fund. And it's interesting, these big companies, obviously, that have, tens of thousands or hundreds of thousands of employees. I mean, that's going to take a long time to implement some of these new technologies and get everybody trained on everything and make sure it's secure and so on. And it's interesting in the hedge fund space. I mean, it was probably 6 months ago that Ken Griffin from Citadel said, we have seen no meaningful, help from AI. It's done basically nothing for us. And then about a month ago, he said, holy smokes, AI has changed the game for us, right? We have such we've sped up the process so much on what we can do and test and implement and so on. So it is interesting. It's interesting. I love the constant, let's call the top kind of folk. And that's why I love asking this question, right? I had a guest on here not too long ago that said, I'm basically only buying companies that are spending a large amount of their capex in AI. He said, I just don't even, and then he, we talked about some of the numbers of some of the, Mag 7 stocks. And and which ones are, massively investing in that space. And so, it's so interesting to kind of hear both sides of that story. But
Okay, can
um,
I chime in with a few things on that? One
for
is
sure,
to the big companies, they're, I think it takes a lot of people I spoke with that work at big companies. This is not from reading transcripts, but their companies won't even let them use Copilot, or they're just finally starting to let them now. So, to your point, smaller companies that are agile can do it quickly. Bigger companies, before they're even allowed to use it, there has to be a check and balance system. As far as Ken Griffin goes, Citadel has a bunch of different arms. I wonder if they're using it for their sort of buy side speculative stuff, or if they're more using it for the market making, because I think it just in my mind, it could probably be better for market making type of operations as opposed to buy side.
for
And just
sure.
as far as what I do, I don't really get into capex. I don't get into the weeds. I've never been like a bottom up buy side stock picker type of guy. I use the Soros philosophy that's essentially just know that the trends there. It's Livermore Soros. They use the same words essentially, but they say focus on the essentials. Know that the trend's there. Know that the money's going to go there. Ride along with it. Develop a process. So I've personally never found a lot of benefit of digging in, but I also find deep value stock analysis to be just really tedious. It's not my thing. So anyway, for whatever all that's worth.
It is not for everybody, for sure. And I think that, the access to information and data that we have now, and and research, and obviously all this information we can assimilate now, really has, I mean, I don't know. I haven't looked at the numbers, so I can't speak to this factually, but it seems as though trends and excitement and so on are just getting stronger and stronger, in whatever the theme is for the moment. And, companies that have terrible financials. I mean, we saw this during the crypto boom, right? We saw companies that just said crypto, right? And you're like, congratulations, you're a company and you say the word crypto, and the stock goes up, 1,000% or 2,000% over, whatever short period of time. And so that is the interesting part about, when you start really digging into the financial metrics. It's like, okay, maybe a company has great finances and great money, and that's probably a decent long-term investment to, these guys make money, everything's great, put some money in there and sit in it for a couple of years. But we say terrible companies go up because they're in the right industry, right? And the trend is there and people are excited about those things. And we see great companies do almost nothing. And so I think that's an interesting point to kind of, keep in mind, is watch that trend. And especially right now, while there's a lot of trend fighters, you've got to have a good process, a good way to capitalize on that, for sure. And momentum is a strong thing for sure.
It's strange because I've been doing this thematic research for several years now, and all of a sudden the trends don't change. Quantum computing, for example, it's been around for several years. I mean, not like it sounds like the administration's now investing in it, so in theory, it's going to get more legs. But a couple years ago, I think it was the end of 24, the smaller cap stocks just went crazy. They went from $1 to $60, Rigetti and others, and then they fall apart, and then it starts again. And that's one of the puzzling things that I've always wondered. It's like the long term thematic trends don't tend to just come out of nowhere. They all of a sudden get popular or the stocks start to move. And I've never been fully able to figure out like why. A lot of times there isn't a catalyst. It's just like somebody woke up and told somebody else, hey, this is the thing now, let's do it. And then 5 and 10 and the feeding frenzy starts and the stocks go. I guess that tends to be in the smaller cap stocks though. In the larger stocks, it's in my opinion, the trends tend to be more prevalent and they're more stable growth potential there, but there's not as much growth potential. So
There's always a give take. I always joke with people and I say this is why it's called trading, right? It's you don't say, oh, I'm investing every day. Say I'm trading, and you're trading one thing for another thing, So and it's a trade off, really, is what it is so often. So that's great. Now I simply cannot overlook. You've got a co-authored book coming up, and anybody that has dabbled in the stock market ever should be familiar with the Market Wizards books. So tell us a little bit about that.
Yeah, I was working for that family office and I was designing systematic trading strategies, and I started to see a lot of what people told me were manifesting in my own results. And so I studied Ed Sakota. He's in the original Market Wizards book, but his website aggregated everything, wrote it down because I didn't want to have to do the research again, and then sent it to him and he published it. And I was like, hey, a lot of what he says agrees with other things that I've read over the years. I've just always read the Market Wizards books and a lot of other books. And so I said, I want to get all this stuff down and identify the sort of core commonalities of the greatest traders of the last 125 years or so. So I wrote a book called Principles of Great Traders that is more or less these guys identified three things. There's respect the price action of the market, stick with your winners, cut your losses, essentially. But it's them saying it in their own words. And once I did that, I just found, yeah, I enjoy this process, even though I was doing it just to improve my own investing or trading or what have you. I liked gathering information, writing it down, and putting it out into the world. So I did a couple papers, including one on Soros. And with the Soros paper, I managed to talk to people that knew him, and they said, this really hit the nail on the head. That's awesome because public information, you never know for sure if it's accurate. But I ultimately wrote a paper on Michael Marcus, who was the first chapter of the first Market Wizards book. And I asked a mutual friend to get it to Jack Schwager so that he could read it and give me his feedback. And we had that call. And at the end of it, he said, you write well. I could introduce you to my editor. And I said, no, I'm okay. Thanks. I don't have any good ideas. And then fast forward about a year, I was researching the early careers of people like Buffett and Bogle, and I found that a lot of really, really successful people had early struggle. So I approached Jack to write a book about that, and ultimately we went back and forth, and it became the upcoming Market Wizards book. So pretty cool, long lead-in story, but that's essentially how it came to be. I had no intention of doing it. I just approached with another idea, initially just to get his feedback on the paper, and then to write a different book I did. It just with the editor and other input. That's what we're doing. So I've been reading the books for 25 years now. So it's
Sure.
cool. It's surreal, but it's becoming more real. We've been at it for a few years now, writing it and everything else. So yeah. Anyway, that's the story.
That's super exciting. Those Market Wizards books are I mean, they're awesome. And anybody that has not read them definitely should, just start at book 1 and keep trucking. And now, did we say this? I can't remember. 6. This is the 6th,
This will be the sixth. Yeah, it's coming out on June 9th.
June 9th, so 2-ish weeks, give or
That's
take.
right.
So
Yeah.
we all need to we're definitely going to post a link. Is this going to be available on like an Amazon type situation? Can we get it from there?
Yeah, the publishers ask that we provide a specific website that I can send you because there are other book retailers beyond Amazon, and they like to allow people to choose. But it's definitely on a handful. I have my ex. I have a link tree that links to the website to get the book. I'd read it to you, but it's super long and it would be painful, for me to spell it out here. But I'd be
Hey,
happy to send you the link.
no, perfect. We'll get that link posted with this episode for sure because I feel like so often, especially in the stock market situation, and especially in a time where we have so much information, we have so much, helpful. I mean, just talking AI, right? For the individual trader that is just one person doing it on the side, and you think, okay, I have this endless amount of options and possibilities with the internet and AI and all the research that's out there, it can seem a little daunting and a little overwhelming. And I think, something so interesting about Market Wizards books and just kind of studying what other successful traders have done, those principles last forever, right? Don't have an endless scope of trying and doing everything. Focus on a few things. I love the few principles you mentioned, right? Follow the trend, let the
Yeah, it's
winners run and cut the losers.
That's I basically was just doing research and trying to identify what worked, and so I created a matrix. And I had the x-axis, then the y, and essentially I said, here are the items and here are the people, and those were the only three where I checked the box for everyone. Stuff like diversification. It's interesting, right? You have Ray Dalio, who's very successful, tells you that it's the holy grail, and then you have Stan Druckenmiller, also very successful, says it's a terrible idea. And so the only three things that were really, really consistent were were those three. And I think that the Wizard series is very good at both identifying different approaches that people can take to markets, but also commonalities. What I tried to bring to this book was beyond, being a part of the writing, but essentially anytime I saw the principles in action, I would try to point that out. And I also tried to identify personality traits that are consistent among very successful market people, wizards and others. And they all have very, very different personalities, but there are similarities, in their personalities that I think are valuable for people to know. So
Yeah, yeah. I'm sure there's people out there thinking, do I have the temperament? Do I have the disposition to trade and to invest? And and I think, like you said, a lot of these wizards, right? They have their personality traits, and I think the stock market favors finding a strategy that sits well with you, right? I mean, I've had a lot of guests on here, and I have people that say, I want to own 3 stocks for the next 2 to 10 years, right? And then I have people that say, I'm in and out of the market 100 times by the first hour of the open, and everything in between. And so I think that as people, as you read these books and as you see what's kind of out there, it's good to get the information and find things that sit well with you. You can have just like you said, right? Like Stan Druckenmiller says, diversification's terrible. He goes in heavy, and he's had some tough runs and whatever, but he has a personality that can handle big drawdowns and can keep, can keep the constitution together, I guess, to kind of go back in on some of these dips. Whereas, maybe Ray Dalio says, that doesn't sit well with me and my process, and so on. And I think every individual trader and investor needs to kind of find that. Are you a high risk appetite kind of person? Are you comfortable being in and out of the market with a lot of volatility and so on? Or are you, a long-term investor? And somebody can take a successful strategy, and if it's not a good fit for them, lose money with it. And so I think really kind of fitting those two things together is great. And I think that's what the Market Wizards does so well, is you hear all these stories about traders doing things so differently and having huge success from it. And so
yeah, I think you hit the nail on the head. It's about identifying who you are and what works for you, and really, it's about what you can stick with in the bad times. Because it's easy to make money. That's nobody has a hard time with that. But the difficult times and finding your temperament, I'd say the only thing I might add is, the words versus actions. You can think you know who you are, but the markets will really teach you who you are if you let them. Because you might say, well, I can endure this 50% drawdown if it means that I get to make 100% a year, just arbitrary numbers. But then when that 50% drawdown comes, you'll have to be like, well, do you have faith that it's going to continue? And a lot of people
sure.
find that they do not. So it's important to test your beliefs about who you are in the markets to find out who you really are. And then I think a lot of people, I don't, maybe run away is a good word. But if you continue learn yourself, you can at least become, I think, net profitable. As to whether people can become market wizards, I think it's a more complicated discussion.
For sure, for sure. And I think that is such a good point. Sitting in those big losses and big drawdowns, even though it's part of the plan, can be a lot more difficult when you're there, especially when you start thinking to yourself like, okay, I could have bought, a car with that money or a house or whatever, and you get inside your head and things start to get kind of crazy. So it is good to really get to know your ins and outs. Trading is, I mean, I've been at it for 25 years, and as you say some of these things, it kind of takes me back to that first year or two or three, and just thinking, I did a lot of short-term trading in the beginning, and I remember thinking, I was in California, Pacific time, so it was super early. I'd be at my, computer at 5:30 in the morning, and I remember so many times thinking, if I would have slept in and done nothing, I would be ahead. Here I am. I've lost money. First couple hours have been crazy, and I should have just stayed in bed, And So it's funny to think back about those times. But yeah, trading will help you know the ins and outs of what you can handle versus what you think you can handle, for sure. I love that.
Amen.
So let's do it. But I think that is great stuff. I definitely encourage everybody to get your book when it comes out in a couple more days here, June 9th, you said.
Yeah, thank you for that. Thank you to anyone who buys it. I think you'll like it. I think we did our best to make it a great book, good stories, but also good lessons about process. And some of them are specific where you get to see the guys and what they do and hear their approach, which is different than the other books. But there's also generalizable lessons, which are the principles, but other things too. So I think, I mean, obviously I'm biased as the author, but essentially I find it hard to believe that anybody could read it and not walk away with something valuable. I think that there's a lot of valuable insights for people to take and try to improve their process and hopefully therefore their outcomes.
For sure, for sure. Well, I will 100% buy it, and I'm excited to read it. I've loved all those books, and I'm sure this one will be great. And it's and it is nice to kind of have an updated version of kind of what people are doing. I mean, markets are changing and things are different. And when I got involved in the market, in 2001, I mean, things have changed so much since then. And the introduction of technology, right? And how traders can access markets and information and so on, and that's only accelerated more and more. And so to hear some more recent, updated stories on that, I think is going to be awesome. So we'll make sure to post that link with this episode, as well as, is there anywhere else you tell people to kind of follow what you're up to? X, and do you have a Substack that you?
I think I have a couple. Linktree is probably the best. That's become my central routing hub for all the things that I do because it's easiest. You can just look down the list and say, "Oh, I want to check that out," and go back and check out another corridor if you prefer. But yeah, I'll send that over. I appreciate your willingness to
Perfect.
share that.
Yeah, we want to make sure people can have a good way to keep in touch and follow what you're doing and what you're up to. And I, for one, have enjoyed our discussion. I think everyone else will be able to take some good stuff away from this. So thanks for joining us today. It was great to meet you and talk a little bit about the markets and your approach, and obviously your upcoming book. That's super exciting. Congrats on getting that put together and done.
Thank you, Jared, for having me too. It was a good conversation.
Absolutely. Thanks again, and we'll be in touch. We'll have you on in a future episode for sure.
Okay, sounds good.
Thanks, George.